Hello everyone, and I'm out with my mask and the clouds have gathered and it's begun to rain and everything's looking a little bit more perilous today than it did yesterday, from both a macro perspective and a local situation. Basically, we've seen increased measures in terms of the lockdown in Sydney, and we've seen stock markets start to roll over and fall rather sharply. And I'm happy to say, it does give miners a bit of an advantage, that, the Australian dollar's going south the way we thought it might yesterday on the pier with those considerations. This is usually a vibrant, busy little village, and as you can see, it's not too busy at all. As Sydney-siders come to grips with the idea that things are going to be a little bit tougher over the next week than they have for the last 2 weeks in terms of the lockdown. Schools aren't going back, they'll be going back a week late, but that might be optimistic. I mean, we really do hope that schools will go back this term. I mean, the degree of hospitalizations, the ever-increasing numbers are a real concern. As for stock markets, they look perilous as well. Everything I've been saying the last few days continuing to look like, we might have just seen a major top for stocks. As Pfizer says, a third booster is required. So I would think diversified portfolios and defensive at the moment is the way to go. Clifford Bennett, Chief Economist, ACY Securities. Oh. Hello everyone. I thought we'd done today's take. Okay, so it got cut short. All right. And also yesterday after the pier, everyone wanted me to get wet today, so I'm kind of in the rain. It is falling on me, so I'm getting wet for you. But I really want to highlight just once more again that storm clouds have definitely gathered, particularly in the global equity markets and for all investment markets across the board. We're seeing meme stocks roll over. We're going to see continued high uncertainty for the cryptocurrencies, but most importantly, those main big stocks are all starting to show weakness. In Australia today, we've seen significant downward pressure again in that big range. I think we're ready to break lower. I really do. I think you should be very prepared for both the Australian dollar, which we got right yesterday, and I think there's going to be a lot more further downside there as well, and for stocks to be highly at risk over the next 1 to 12 days. I think this could be a prolonged risk period. That means opportunity as well as risk. Even if you're an importer or an exporter, if you trade the currency correctly, you get a pricing advantage in terms of successful hedging strategies. So there's all sorts of things you can do in markets. But I think as a trader and investor, the key point is we may actually get a steady trend from here. And that is, fortunately or unfortunately, how you see it, to the downside. There's no doubt that stock markets have been too high. Is this the big one? I thought it was earlier and I was wrong, but I actually do think this could be it. So it's really something to be very focused on at the moment, and economic data itself is not looking great. People talk about these boom times, but these are growth periods back towards where economic growth was before, not surpassing it. Might surpass it in terms of a monthly or a quarterly number, but we're not back in the US and other parts of the world, particularly Europe, we are not back to better than where we were before in terms of total absolute GDP. And a lot of people keep missing that point for some reason, thinking strong recovery growth is a booming economy. No, it isn't. Like that jobs data last week in the US, 850,000 new jobs, but 270,000 of that alone was just teachers going back to work because schools reopened. So the economic data is not as good as a lot of people are screaming at you. The Australian data is rolling over, the US data is rolling over, and even in China there are signs of data rolling over, and we know Europe is still rather flat. There's a lot of fundamental reasons to be selling stocks right now. So I'd certainly be very aware of that downside risk scenario. This could turn into a situation where gold comes back into favor again, because if we continue to see the Delta variant spiking as it is in hospitalizations in places like Texas and elsewhere around the world, we're going to see continued disruption to supply chains, even lockdowns reoccurring around the world. Hopefully not as severely as previously last year, but still occurring. In Sydney at the moment, lockdown restrictions have been tightened, and the situation here is increasingly uncertain. And just going to my local coffee shop a little earlier, they were saying that people are definitely, I was waiting for that bus to change gears, people make a lot of noise. People are definitely getting more stressed, there it goes, tempers are frayed, and so I just think it's a very difficult phase for people generally. It's going to be like that in other parts of the world, and there's no fundamental justification for where stocks are. Clifford Bennett, Chief Economist, ACY Securities. Thank you.